Okay, without further ado, we shall start our second roundtable session of the day, which shall be focusing on the rise of real assets, infrastructure, private equity, venture capital, and real estate. And I'm delighted to count amongst us, to my right, the Right Honourable Nicholas Cherry, to his right, Jean-Pierre Moreau, Jörg Inderst, and then last but not least, to Jörg Inderst's right, our very own Vincent Bazzi. And without further ado, I shall give the microphone to Jean-Pierre, and for the sake of Gallic pride and also diplomatic conformity, we decided that that particular roundtable shall be a bilingual, Franco-English or Anglo-French or Anglo-Norman roundtable, so we shall do some live translation of part of it, and well, I guess the floor is yours, Jean-Pierre.
The beginning, or to apologize for my English. I prefer to speak in French if you want. You do. Considérer le bord de l'océan comme un lieu de villégiature agréable est quelque chose d'assez nouveau. Pendant des siècles, l'océan, c'était l'inconnu, c'était plutôt quelque chose qui faisait peur. Voilà. Peut-être qu'on réconcilie le temps ancien et passé aujourd'hui en faisant la réunion du G7 juste ici à côté, et nous en regardant la question des fonds de pension.
And Jean-Pierre just said that, you know, we are here near the ocean on the outskirts of Biarritz in the resort of Saint-Jean-de-Luz. And we're near the ocean, but for hundreds of years, you know, for mankind, the ocean was perceived as a very threatening element because of swamps, because of storms, and mankind has domesticated that environment through investment in infrastructure. Because all along the seashore here, it used to be a desolate swamp, and as early as the medieval era, there were governments at municipal or provincial level, you know, fiefs, medieval fiefs, and they levied taxes or invested money to drain the swamps and build bridges, as we say in French, bonifier. So we need to enhance the land, make it good, make it usable for economic and human activity. And all that was infrastructure investment that stretches back to the medieval era. And it was in a context of relative monetary stability. So for most of the time, when these fiefs and earls and dukes and municipal councillor échevins invested in infrastructure, what we call the interest rate was stable, and Jean-Pierre alluded to the fact that until very recently, the interest rate environment was predictable or rational or stable, and it worked according a very linear model, if you will. But things seems to be changing in the world in which we're... Very good point, that's a very good point.
Dimension sociale.
Yeah, and I think one of the reasons perhaps, and I think Jean-Pierre focused on the example of the train or rail transportation, which has had to compete with airplanes and cars with various degrees of success. One of the reasons perhaps why, you know, in countries, let's say like the US, for example, modern rail isn't as developed as France or Spain, is that people focus narrowly, policymakers and investors and congressmen and presidents focus narrowly on financial returns, and perhaps if we would jointly with traditional Graham and Dodd, Columbia University, financial, if we would jointly with that, add a second component, which is, as the French president says, et en même temps, right? At the same time, ESG return or social return, and for every asset class, for every investment, every CIO, every financial analyst would start incorporating or in parallel to his DCF cash flow, analyzing thoroughly the social return or the ESG return of each investment, perhaps things would change.
Yeah, 2 quick points. I mean, what I do find fascinating, coming back to it's been said earlier, there is a decline, and in some countries very little change. I mean, what I find fascinating is that in the US everything's falling to pieces in terms of public infrastructure, with very little public investment and no pension fund investment. And I find it fascinating, you've got the sort of world centre of capitalism, and the place just cannot get its act together. Lots of talk and talk and talk. Yeah, it is. It's a great irony. The second quick point I'd make is I think in the Australian context, it was easier to argue. I'm not saying it was easy, and I'm not saying all privatisations were effective, and I certainly accept. How do you have an effective market in water, for example? You can have an effective market created in power utilities, but water is water, and you're not going to have competing water flowing down pipes. It just doesn't make sense in that way. So you get price gouging. But I think in Australia, one of the arguments that has been relatively successful is that you could say, well, the pension fund, the privatised asset or the PPP is in your pension fund. It's a compulsory system.
Yep.
Therefore, it's helping your retirement. That lessened some of the political backlash. I don't want to overstate it, but it was easier to advance an argument in Australia because everyone's got a stake in the system because it's mandatory.
The big
I'm aware of time, so we shall leave the concluding remarks to Dr. Inderst and Vincent Bazzi. And so,
just to say
a question to you
on
guys,
this point, Jean-Pierre made the social function of infrastructure, which is inherently there.
Yeah.
I always thought that there is a very strong connotation between infrastructure investment and ESG, sustainability investment, and so on, which interestingly investors haven't made initially for a long time. I was always surprised. I mean, politicians, some might have made it, some enlightened people, but it's only recently through that new drive into ESG investing, post-Paris, COP 2015, green investment, climate change investing, and infrastructure investment lends itself very well if you think railway, public transport, renewable energy, which is, by the way, half of the current investment is in renewable energy globally, because the only thing that seems to be really built on a big scale are windmills, wind farms, and solar panels, including India, by the way, which seems to be working there also for private investment, just having a sort of a emerging market stint. But I think that could be elaborated much further, both and the social component, for example, of social infrastructure investment in the hospital and schools and that sort of thing, which there was an element of that initially, but seems to have been lost. For example, UK has completely put the PFI model and social infrastructure into demise for all sorts of reasons, good and bad reasons. So that has to be found again. On the other hand, of course, it has to be said, talking about ESG investing, there's also the G, the governance thing, and infrastructure investment being monopolistic, being very political, and so on. You're dealing with assets and companies that are inherently big, national, monopolistic, and also very prone to corruption and poor governance. So, and that has to be, investors have to look that into the face.
So on that careful note,
this is a very important question, actually. I can tell you what we did. We started in 2009. In 2012,